So I had a call yesterday with someone who had read my book, and they were looking potentially at doing a deal to finance some equipment. There's a successful business owner who has had a business going for almost 20 years, and according to the person I was talking with, really knows their stuff, knows what they're doing. And they're expanding to an underserved market. They're going to open another location in a new market that doesn't have very much in the way of competent competition. And there's some equipment to fit out sort of a retail location that needs to be purchased, about $20,000 worth. And the equipment component is actually quite small relative to the leasehold improvements that are probably going to have to be done, shelving, flooring, etc. And inventory is going to be significant as well. But the inventory is fungible. For those of you who have read my book and that discussion on inventory. So the guy who's opening this store apparently doesn't need any money. He's got money. But he's started to look at financing part of his needs simply out of the realization that he'll be better off opening up a new location, having money in the bank in case things don't go exactly as planned. If you download my 15 business finance articles, which is a free download from my site, investlocalbook.com, there's an article in there about how entrepreneurs are sometimes very debt averse. They don't like the idea of owing money. They don't want payments. So sometimes they take their cash and they pay off their debt only to end up in a cash crisis later, and then they run around trying to borrow against assets and get really unfavorable terms. The time to borrow to acquire assets is, number one, when you're buying them at the point of purchase, and number two, when you don't really need the money. That's when you're going to get the best terms. So this fellow who has a lot of experience, he's opening a second location, he's decided that maybe it does make sense for him to finance this equipment, and it's about $20,000 worth. And I was talking with the guy who might finance it for him, who's read my book, and he was asking about, details about putting the deal together and stuff. And one of the topics that came up were the terms that he was going to ask for. So what interest rate, what time frame would it be repaid over? Looks like they're going to do it like a capital lease, which makes the most sense. And then when the question of interest rate came up, it was very interesting because the investor was saying that he wasn't sure what he was going to ask for as far as interest, and one of the other components that he said he wasn't sure about whether or not he was going to ask for was whether he wanted personal guarantees on the payments or not. So I asked him, what rate of return would you want if there were no personal guarantees, and what rate of return would you be happy with if there were? And he said, well, I don't want to do any deal unless I don't get at least 9%. That's my bare minimum. And I know that this guy's been in business for a long time, and personally he's probably very financially okay. And if everything went wrong at the new store and they closed, the old store could probably pay the lease payments. And I said, okay. And I said, so that's the minimum you want. If you were going to take a little more risk and not have personal guarantees, what kind of rate of return would you want? And he said, well, I'd want a good chunk more. So he decided 12. And I said, well, one of the easiest ways to negotiate this is to simply put it to them and get back to them and say, look, I'm willing to finance the equipment. If you give personal guarantees, I'll do it for 9%. No personal guarantees, I want 12%. And let them decide. And what's great about it is their decision is going to give a lot of important feedback about their level of commitment and their, their level of confidence, I guess, in the proposed new store. Because if they come back and immediately say, yeah, we'll personally guarantee it, I mean, that gives me a great deal of comfort knowing that if everything goes to hell on the new store, you got somebody else to chase for the payments. And it also gives me confidence that these guys are absolutely sure that things should work out well. If you want to learn more about doing deals like this, private finance deals, loans to small business, etc., buy a copy of my book. You can download a PDF version off of investlocalbook.com. It's also available in softcover on on Amazon, and it's available in a Kindle edition as well. Thanks a lot, and catch you next time.